Commissioner Costello, Commissioner Hirsch, Commissioner Winkleman, good afternoon. How are you all?
Good.
Okay.
Solicitor Shiverini, Treasurer Lombardi, how are you?
Hello, how you doing, Mr. Mantini?
Well, thank you. Staying safe, I hope.
Yes.
Am I reading this correctly, that this is streaming on YouTube?
Yes,
Hi, Chief.
I think it's part of making this accessible to the public.
Open meeting.
Right.
Madam Clerk, good afternoon. Mr. Fabrizio, I apologize. I left you out. Good afternoon. How are you?
How are you doing?
I'm well, thank you. Good to see you. Good to hear from you.
You as well. Hope everyone's healthy.
Yeah.
Okay, Mayor, are you ready to go? We'll, whenever you're ready, you can ask the stenographic reporter, Jen Emity, to call the roll call.
All right. It is 12:05. Thank you, everybody, for joining us. Can we have a roll call attendance vote call, please?
Mayor Alorza,
Present.
Vice Chairman Lombardi,
Present.
Councilman Igliozzi. Councilman Igliozzi is absent. Ms. Silvera. Present. Mr. Costello.
Present?
Mr. Hirsch.
Present.
Mr. Winkleman.
Here.
So you have 6 present and 1 absent. You do have a quorum.
Wonderful. So I have 3 things before we jump into the agenda. The first thing is everyone should have received the agenda via email. Is there anybody who does not have a copy of the agenda or the attachments? All right, I'll take that as a no, so everyone has it in front of them. The second thing is for anyone who is not talking, while you're not talking, can you please mute yourself? It's very easy to do on the keyboard. There's a shortcut, Alt-A, and then you can Alt-A again whenever you want to speak. Or if you want to just unmute it while you're pressing the button, if you press the space button, it'll unmute it while you hold it down, and once you let go, it'll mute you back once again. And the last thing is just a bit of good practice that we've learned from using Zoom so much is it actually really helps if you tune in doing your telephone audio. Oftentimes, sometimes you get knocked off and there's a bandwidth issue, but I have at least found that if you use the phone audio and the computer video, it works really, really well. All right. With nothing else, I have one last thing to say before we jump in. I want to recognize Commissioner David Hirsch. Commissioner Hirsch had a letter to the editor published in the Wall Street Journal recently, which is a very, very cool thing. So congratulations, David. That's a really nice thing to have. And thank you for sending it over. I certainly enjoyed reading it. So that said, we'll jump into item number 1, investment performance analysis, and we'll pass it over to Eric.
Thank you, Mayor. Hello, everyone. Hope everyone is doing well and staying healthy since our last call. You should all have your flash reports, etc. Your report now electronically. If you turn to page 1, as we always do, I'll give you the latest update that we have. If you do get to page 1, you will see that the rally that started in the sort of the last week of March has continued quite strongly. And you can see that in your numbers month to date. The portfolio is up 5.6%. and is now down 13% year to date. You may recall in the last flash report that we gave, which was calculated virtually at the bottom of the market, the S&P was down almost 30% at the time, and the portfolio was down 24. So it's come back quite a bit since our last call. It's back up to 295 million. That's about 32 million or so, somewhere in that range, that has been made back since our last meeting. You can see that equities, of course, are up the most month to date. Growth really does continue to outperform value this year, especially on a year-to-date basis. You see that throughout the numbers in the portfolio. Credit has made a huge comeback as well since our recent call. I saw some things happen in the credit markets that were just astonishing. In the municipal bond market, investment grade market, high yield market, mortgage-backed securities, even in the treasury market, there was some great tensions that had been growing, and you saw some things occurring that I didn't even expect to see in the government markets ever. The Federal Reserve has stepped in, as you may know, many of you follow this closely, in a way which is just gigantic and unprecedented. It makes what they did in the great financial crisis look modest, actually. Today, as you may know, they are now intervening directly in the corporate bond markets. They're going to buy bonds directly from corporations issuing them. Nothing like that, has ever been done. And they're going to buy credit in the secondary market as well via direct purchases of bonds of investment grade companies, or those that were investment grade as of March 22nd. Those are the ones that they will buy. So they could have fallen into the non-investment grade realm, and they will be bought. They will buy some ETFs as well. They have also intervened in the short-term money markets, commercial paper, money market funds, repo, etc. So just gigantic intervention. The balance sheet of the Federal Reserve is up by trillions of dollars in the last weeks, in the last month or two, and it will continue to go up. This is one of the reasons that markets have stabilized, especially bond markets, and you can see it in the portfolio. Your bonds are doing quite well year to date. Loomis is up. Loomis is up 3% year to date, and bonds are up. Your treasuries are up 7%. Interest rates have plunged. You can see that on the 10-year, down around 60 basis points. That's been, a massive and unprecedented move. We haven't really seen anything like that before as well. Hedge funds are adding value as well. I see Renaissance, our largest hedge fund manager, up 8% month to date and down 7.5 year to date, outperforming the markets, adding value. That's a big help to us. But even though this, I was talking to the mayor earlier, even though this rally has been huge, I think we have to expect, in the short run at least, for weeks and months actually, a lot more volatility, very high levels of volatility. Monday and Tuesday of this week, for example, the market fell 5% in 2 days, and small cap and mid cap did worse, and international did worse over those times. And yesterday was a big up day. Today is a big up day as well. So I expect that to continue. But as you can see, the board in previous meetings decided to keep its asset allocation, its long-term strategic target. That was commented about last meeting, and that has helped your rebound very strongly in recent weeks. Cutting losses significantly to a much more manageable level. By way of some color on the exposure in the portfolio relative to target. There is a little bit extra in the bonds, in the fixed income portion of the portfolio right now. I was telling this to the mayor earlier as well. However, either today or tomorrow, we're not sure, but we've been informed that 7.5 million will be coming out. That's pretty common for this time of the month. And so when that happens, that is going to bring the fixed income exposure almost exactly to the target in the portfolio. So that would mean that we would have no need for or a recommendation at this time for a rebalancing of the portfolio to target, because we'll be very close to it by the end of the day today or tomorrow or what have you, as soon as that money comes out. So I could certainly go on more about markets and the economy, et cetera, if you like. I'm in the camp that the economic damage that's being done right now is not only gigantic, I think it's bigger than many appreciate, even in my own business. You know, GDP could fall 30% or more in the second quarter. We saw another initial jobless claims this morning, 4.4 million. We're now talking about 26, 27 million people that have lost their jobs in the last 4 weeks. I think earnings are going to be hurt substantially in this time period. They will recover eventually. I think it'll be a while before they get back to the level, of course, they were before the pandemic, and so will the economy. And the markets will see that before the actual economy does. They will anticipate it. They're anticipating at least some of it right now, the way they are acting. But that said, I still think we're in for some volatility for sure here in the short run, because the damage is great. And the virus will still have the effect of causing markets to move a great deal in this period of time in both directions, until we get more certainty on the pandemic itself and on therapeutics and on the vaccine. But that's an explanation of why the portfolio and markets are moving the way they are. I'd be happy to take any questions in that area if you like.
Eric, can you talk a little bit about the mix that we have, value to growth? And, when you look at our trailing 12-month numbers, our equity returns are meaningfully below the S&P, and clearly that's because of the value versus growth bias, and also a bias towards small and mid cap versus the large cap.
That is absolutely correct. It's the small and mid cap exposure. Those sectors have done far worse than the S&P. 10 points worse usually, depending on what day of the week or what time period you're looking at. But that is absolutely correct. For example, it's about 12 points worse right now as we speak on the S&P versus the Russell 2000. So that's definitely the reason. That's part of the long-term strategic asset allocation. Large stocks domestic stocks in general have done better than any other asset class by far, U.S. or international, and growth over value, as you point out, has also been the case. In the long run, most research says that value will outperform, but it's certainly been a good while now since value has outperformed, and growth continues to outperform in recent years and in this pandemic environment. And with rates where they are now, it doesn't surprise me, and I think that matters a lot for which sector growth versus value, large versus small, tends tends to do better, tends to outperform. Now, don't get me wrong. If we get a good rebound here in the coming weeks or the coming months or quarters, everything will go up, and everything will go up a great deal. But growth certainly does continue to outperform.
So
You're correct.
are you advising your clients to adjust the growth versus value or the large versus SMID area?
For my client, well, yes and no. For my clients who are more tactical in nature and willing to make those moves and take those risks, those sort of timing risks or long-term allocation change risks, the answer is yes. I have been, but many are very much long-term in nature and strategic in nature, and they tend to not make those changes. Where I have discretion, I have been making those changes. You may recall from previous meetings back in February, I not only did that, I raised a lot of cash. I was very worried about the market, so I sold equity, but I sold value more than growth. And I've been in the areas where I have discretion or clients are tactical. Growth has been getting a greater size allocation relative to value. If that helps.
And any other questions or comments? Okay, if there are none, I'll entertain a motion to accept the investment performance analysis as just delivered by Eric. Is there a motion?
Winkleman, yes.
Is there a second?
Seconded.
Second.
Any discussion on the motion? All those in favor, please say aye.
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 Are there any opposed? Okay, none opposed. The motion carries, and we'll move on to matter number 2.
Mr. Chair,
Discussion.
mind clarifying the seconder for that motion?
Who seconded
Jim
that
Lombardi.
motion?
Jim Lombardi.
Great. Move on to matter number 2, discussion and or decision relative to rebalancing the portfolio. So Eric, is there anything to cover here?
No, Mayor, because of the things earlier mentioned in our discussion and the fact that monies will be flowing out either today or tomorrow, we do not recommend that there is a rebalancing to target necessary at this time.
Okay.
Eric, are those funds coming out of Loomis?
They come out of Loomis, yes. Also from the other fixed income, the bulk comes from Loomis, yes. So, also sometimes from treasuries as well, sir. But the large bulk comes from Loomis sales.
Why would we not take it all from Loomis, looking at just what's happened and what you just commented on is expected to continue to happen?
Again, it's keeping the target allocations. So by taking the money proportionately, it keeps your target where they are, where they are in your long-term strategic asset allocation, as opposed to a timing play to take more from one or the other based on what we think rates will do or not do.
So you think a 4-to-1 ratio of Loomis's investment versus treasuries is still appropriate?
I think it's okay. And don't forget, a large portion of Loomis's portfolio is treasuries, usually around 40%.
Yet year to date, they've underperformed by half what treasuries have performed.
Well, it's not an apples to apples comparison because Loomis has a shorter duration than those treasuries. Those treasuries are longer term. They usually have a duration around five years or so, whereas Loomis is around 3. So it's the length of those bonds that matters a lot too for the relative performance in both directions, when rates are going up or going down.
Do you recall what the Treasury benchmark would have been for the 2 to 3 year Treasuries versus Loomis's benchmark performance?
I can check.
Or is that in the individual manager chart?
You could see it there, yes.
There, let me see if I can flip down to it.
I'll tell you what page it is here. Page 31, you'll see the recent performance on year to date. It's trailing by 30 basis points its benchmark, but over the last year, it's beating by 30 basis points, 9.1 versus 8.8. And over 3 years, beating by 30 basis points. Over 5 years, beating the benchmark by 40 basis points. Over 10 years, beating it by 70 basis points.
31 I show is Robeco, so I gotta keep going, I guess.
Yeah, I can't find it either.
Oh, I'm sorry. I'm looking at the, I apologize. I'm looking at the wrong, that's the wrong one. Sorry. I gave you the data from the previous meeting.
You can find that information on page 53.
Thank you. Well, that's the Vanguard. Where's the?
No, if you're looking at the PDF
Yeah.
pages,
Yeah.
those are off relative to the actual thing. I think it's on page.
I show 48 in what I'm looking at here
I can't find it.
through March.
Yeah, Loomis is page 48 in the PDF, the PDF numbered pages.
So they've underperformed their benchmarks and matched it for 3 years. And underperformed the last year. Okay, thank you.
Okay. So any other questions for Eric with respect to agenda item number 2? Okay. So, clerk, how do we, Jen, how do we handle this? There's nothing to discuss here. We don't need to take a vote, do we?
No vote. No,
Okay.
you don't. Jen, you're on mute, but.
Sorry.
Okay,
Yeah.
great. So we'll move on to matter number 3, discussion relative to Dexter donation fund and other trust accounts. We'll hand it back to Eric.
Thank you, Mayor. If you look at your other portion of your package, the investment performance and review of the Dexter donation and other trusts listed there, and were you to turn to page 1 in the PDF at least, we always start with the Dexter donation trust. You see that it's up 7.6% month to date through the 17th, and down 14.4 year to date. These are essentially, 80-20 portfolios, no alternatives. They're too small, so they have larger amounts of equity than the large pension plan does. So that helps them in good times and reduces their relative performance in bad times, but not doing too bad considering the allocation and what markets have been doing. Again, value and growth differential, we see it. Small cap, large cap, mid cap, large cap, international, they're all down much more relative to growth, especially large cap growth. But no recommendations for the portfolio at this time.
Any questions for Eric? If there are no questions, I'll entertain a motion to approve the review as just provided by Eric. Is there a motion?
Winkleman, so move.
there a second?
Seconded. Lombardi.
Any discussion on the motion? All those in favor, please say aye.
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 Any opposed? Okay, there are none opposed. The motion carries. We'll move on. We'll move on to matter number 4 on the agenda. There are no discussions relative to claims and litigation for this meeting today. Is that correct, Council? Is Ken on the call? All right. Well, there are no issues relative to claims and litigation. And so I'll motion to have matter number 4 continued to the next meeting. Is there a motion?
Motion. Lombardi.
Who was that? Lombardi.
Lombardi.
Yep, Lombardi motion. Is there a second?
Winkleman, second.
It's seconded. Any discussion on the motion? All those in favor, please say aye.
Aye.
Any opposed? All right, there are none opposed. The motion carries. That is all for today's agenda. I'll entertain a motion to adjourn.
So moved.
Motion to.
Winkleman.
Seconded.
So
Lombardi.
moved by Commissioner Winkleman, seconded by Lombardi. All those in favor, please say aye.
Aye.
Any opposed? The meeting is adjourned. I really appreciate everybody, setting up the technology and being a part of this meeting. So thank you so much, everyone, and I look forward to chatting soon. Take care.
Thank you.
Bye.
Thank you.